Hello, you're watching Dukascopy TV. I'm Thomas Taplin and welcome to the last targets in focus of the trading week. We've got an emerging market theme today, examining the disparity between the Turkish Lira and the Indonesian Rupiah. Joining me on the line is Ulrich Leuchtmann, Head of FX Research at Commerzbank in Frankfurt. Good morning, Ulrich. Now, the emerging markets are quite interesting to be following at the moment, as they've experienced what I'd call a backlash against hints that a Federal Reserve will begin tapering next month. But if we zoom in on the Turkish lira, we see that not only has the currency fallen, but it's not managed any gains despite action from the central bank. Why is this?
Well, I think main reason is that we are still on this trajectory of weaker lira is that the central bank, yes, has taken action, but has not taken sufficient action at the moment. This advantage of the Turkish lira, something which is increasing with every day of increased volatility. The disadvantage has emerged, as you said, because the yield advantage versus developed market investments has become smaller, but now it's also less attractive due to higher volatility, and you need quick and very decisive action to stop such a dynamic. And this is something we are at the moment not seeing from the Turkish Central Bank, especially as they have ruled out so far interest rate hikes. They have announced to make an announcement on next Monday. But without interest rate hikes, I fear that this might be not sufficient.
So what are your projections against the dollar?
At the moment, this is a tricky question because we are in crisis trajectory. Our main scenario is that it will get worse, but will not get worse in a catastrophic way. Therefore, we are expecting for 1 month dollar Turkey to trade around 209, and then to recover afterwards if the Turkish Central Bank manages to react on it more strongly, and if the immediate impetus on this development, the rise in yields in the US and in the Eurozone, will come to an end. Given that, we see weaker Turkish lira in 1 month, but then a recovery.
And against the euro?
Against the euro, I think against the euro, we have to take into account also that the euro is at the moment in a situation which is where it's a little bit expensive, and therefore we're expecting euro not to sustain headwinds at the moment from the US from a start of tapering, and therefore for euro we have a slightly different trajectory. We expect 272 of Turkish lira against euro in September, in 3 months 243, and in August next year 225.
Okay, this is a complete contrast to another emerging market currency, the Indonesian Rupiah, which has actually seen gains after its central bank raised the reference rate to 7% from 6.5%. The stock market is also up over there, so why has central bank action affected the Rupiah so efficiently, but not the Turkish lira?
Yeah, because Indonesian central bank has taken this step of a rate hike, which does not fit to the domestic business cycle situation, certainly, and is creating pain to domestic economics. No question about it. But they are willing to take the pain. But here also the point is, therefore, with such an action, with such a proactive approach of the Indonesian central bank, they might stop the depreciation of Indonesian rupiah at the moment. But at the moment, I don't think that 50 basis points is sufficient to trigger a significant recovery of Indonesian rupiah. And therefore, we expect Indonesian rupiah to move sideways in the foreseeable future if they won't take stronger actions and if they won't hike rates further.
So what are your projections for the Rupiah going forward then, Ulrich?
Well, I think against the US dollar it will remain around 11,000 over the next 12 months. Against euro it might even gain a little bit. In 1 month I would expect it to be around something like 14,300. In 3 months' time, close to 14,000, and in 1 year's time, around the 30,500 mark.
Okay, thanks for joining me today for a quick update on those two emerging markets currencies. Next week is a busy week for the markets, so we'll be here as usual to bring you all the angles as the events unfold. But until then, have a great weekend. Goodbye.